Hello guys. Hello everyone, do you hear me? Let's see how many are we. Let's wait a couple minutes, see how many will join. Welcome to this week's second live stream. This time we're going to talk about entries, support and resistance lines, and volatility. Some requests that I've had during the week. So we'll be waiting a few minutes. For everyone to join. So if you're watching after the live session, you can skip a few minutes. So we're going to talk about entries, support resistance lines, and volatility. These are the requests I've had during the week. So we'll be taking a look at that, and we will see what kind of questions people have in the chat, and we might answer those as well. So stay tuned. We'll be starting in a few minutes. Again, if you're watching this after the live session is over on this channel, you can skip a few minutes forward, because usually we have to wait for people to join. Hello everyone. Okay, if you're ready, we will start. Can you hear me? Hear my voice loud and clear? Okay. Alright guys, let's begin. So I've had some requests about entries, support resistance lines, and volatility. Let's start with the support resistance lines before. Great. Alright guys, so let's start with the support resistance lines, and then I will talk about the entries, because some people asked me when do you exactly enter a trade? Do you wait for the price to close, or how do you do it? So for example, if you watched the previous videos, you know already how to draw lines, but we'll go through it again. So because it has some connections to volatility as well, which is something we're going to talk about today. So in this case, I have a chart of Euro USD, and as you can see, I have already a line here. Let me remove the other ones. So here we go. I have just one thick line, as you will see in a moment, and this was a resistance. It's been a resistance for a while now. So this resistance line is based on these tops, these candles that has been touching it. So you come to the chart, you look at the daily charts, and you work yourself down. So if you watch the previous videos, you work yourself down. Start at the higher time frames and you spot the highs and lows, the candles, and you draw your line. They will scroll further back and look, and you see you have some support and you have two tops here again. So let me wait for the charts to update for you as well. So when you scroll back, you will see this is good. You have these two tops on the daily chart. So so how is this related to volatility as well? What does it mean? It means that price is moving, the price movement, and how much the sellers and buyers in the market are moving the price. So for example, let's draw two lines. Now we'll show you. Let me make them bigger. Maybe we make it another color. Tell me if they're visible or not. I make them green so you can understand which lines I'm talking about. So do you see the two green lines? So if we look back a little bit here in this area, right, so great, now you can see it. In this area there's a tight range, as you can see. So volatility here has not been that big. I mean, it's still the hourly time frame, so it is quite volatile, but for me, I think during this few days with this tight range, I took only 1 or 2 trades because of this indecision in price. So the volatility here is not good. The volumes are not that big. As you can see, the candles are small, so small, low volatility because price is in indecision. So low volatility or movement, price movement, can be the result of two things. One is that basically the trading hours are over. So someone asked me, when do you trade? And I said about 11, 12 GMT until the banks close. And in Europe, most banks will close at 1800 or 1900 if we're talking GMT. And so when the banks close or they're about to close, the volatility usually becomes lower. And then we have the ranging price, as someone said in the chat, when price isn't trending and is in indecision. They can't really, 1 minute it falls down and then the buyers push it up, then the sellers push it down, buyers push it up. So this is also something that disturbs the volatility, so you don't get much movement, not much trending. If you now look at further back here, you don't get these clear highs and lows, as you can see here. You get perfect oversold lows and peaks like that. So you have to consider these two things about volatility: the timing and how when price is in indecision. And when you have a tight range like this, you understand it's in indecision and you should wait, because you can't really say what the trend is. You can't find it. It's really difficult, even for pros. So just stay away. I mean, it's binary options. You can take a trade, you can take 10 trades the next day when volatility comes back. So there is no rush, really. Don't blow your account on days like this. Just skip trading that day. And then you have here's huge volatility today, as you can see, this last bearish candle and the retracement up. It was due to news. So news is another thing that can, a third factor that can change volatility, because then more even fundamental traders jump in the trade and push the volatility. And we can even have news indecision. I've experienced that before when there are two news at the same time, both are high impact, one is good, one is bad, or both are quite neutral, and then you see price jumping down and quickly jumping up, and it doesn't really go anywhere. Well, you have to put it in relation. You have to put it in relation to the trends and previous price, and as you can see here, you have the relationship to the right and to the left. If you look, you see low volatility, high volatility. So you have to put it in relationship to the rest of the charts, and you can see here you don't see a clear trend. If you would zoom in here, you can't really tell the trend there in between. So and when the volatility is low, you're not going to get these beautiful lows, lower highs or higher lows to enter a trade on. So, and you will also notice that, hey, price keeps jumping up and down, and it can't really make a decision. So some people like to trade these ranging low volatile areas. I don't like it because you never know when it's gonna break. You can't take a chance, but I don't like those because price can stay at some level, and it's frustrating when you enter a trade. You expect it to go lower, but then it just stays there. Nothing happens. So don't risk it. It's just that simple. Don't risk things that you don't understand. So that's so we have covered volatility. Now you know you have to put it in relation. You have to look at trends, and you see, does price stepping, making nice trends or not, and compare the candles. I mean, what happened before, what happens after, how is the volatility getting lower, and the bank hours. I mean, are they open? The Europe session, the New York session. So those are the things you should consider. So now next thing we're going to talk about is the entries. The entries, sorry, before we go on, let me just ask you, are you okay with the answers, with the things I've said so far? Any problems? What about the breakout? You mean the breakout from the ranging prices, the ranging area? What about it? Okay, yes, go ahead. Ask away. I'm getting some questions here in the chat. I'll try to answer. If you have questions, just type your question, please, because we don't have to wait for you. I can quickly answer them, so just type your questions. Unless everything's good, we move on. Let's see. Okay, so you're asking if level 79 is considered a support or resistance. So let's go and check it out. Just a moment. Let me show you my other chart real quick here, and you will see the lines I've had there before. So these are the lines that were here before. I haven't drawn any today. So as you can see, price came down here, touched this line, and then we have a huge candle wick. so it became a support here. But if we had looked further back, you see it was support before, and it was resistance too. So right now, yes, it did act as a support today. The 77900 for me on my chart. And so you would look back and see, okay, it was support before, it was resistance before, and that's pretty much it. You can just scroll back and see. If it's just one candle touching one line that's never been touched before, I wouldn't consider it support or resistance until it gets confirmed by several other contacts. So the next question is whether you should stay away when there is a medium impact news for GBP. Well, Euro USD, when it comes to Euro USD, you should only stay away when there is news for the Euro or the US dollar. I have never looked at the British pound for I've never had any concerns with that, with news regarding any other assets. So when it comes to Euro USD, I only look at Euro and USD, and it's been working out for me. So I don't see why I should consider other currency pairs. I don't do that. So my answer is no. Just look at Euro and US dollar. Unless you're trading GBP US dollar and then there is a USD news coming out, then yes. But if you're trading Euro dollar, then either Euro and dollar. That's gonna be your concern. So far so good. Any other questions? Lily is asking whether the breakout is no good to trade, but my question is, how do you know that's going to be a breakout? I mean, if you have a strategy that really works and you know you have been trading breakouts and you're certain it's going to break out, like, I don't know, the majority of the times, then go for it. But I don't know how you can really 100% tell that's gonna break out. I mean, if you look at those ranging markets for now, for example, look at this Euro USD on the daily chart. You see you have a slight breakout, but then price went immediately back into the ranging area. So maybe you would have said, okay, it's breaking, it's going down, and then you would short it for a week, and well, you would have lost here. So I don't know how you would tell the breakout. I mean, look at this, you have a false breakout here. So I wouldn't take chances on that. I want to go with clear trends. I want to know here's the lower high or here's the higher low, and I want to enter in the good trends. I don't want to risk anything else. So I wouldn't trade those breakouts. Again, you have this losing example here. Yes, when you draw a line, you should consider where price has been closing or coming near. Well, if you look at this area, for example, the charts that I'm showing you right now, you see that both candle closes and wicks have touched this area. So, and then you have to consider the distance between the candle wicks and the closes as well. So you might have been able to take a put option at the candle closes as well as the wicks. So you have to consider that too. But what you look at is history, basically. So you look at the candle, you see these candles closed here at one of the tops in the middle. To the right you will have several candle wicks, or shadows if you want to call them, and then you go to the left, you see again you have candle wicks, and you keep going back and you look and you see here you had support, resistance, and these two tops here basically confirm that. So let me tell you this. Let's go back again. Those two tops I showed you on the daily chart. Look at these two. So this time price back here had closed exactly at the line, right? So these two tops, this was last year in March and April. So this time candles closed right below this line here, and here, well, obviously price was trending down. If you go back to today's chart, see price is trending down, and when it came up it didn't reach all the way. It did reach all the way, but it closed under. So this time it didn't manage to close at the line. But again, if we check history, we will see that this line placement is good. Back recent history and present history. So I know it's a little bit difficult sometimes. You don't know you're gonna put it at the wick or at the candle close, but you have to check history. That's all you can do. That's how you can confirm. Now sometimes it is really hard, and as you said, it's an area rather than an exact point. But anyway, I've been doing this for some time now, and I find that if you do examine, not really, sometimes they are exactly, I mean, if you look at my trades, usually I enter precisely at the point it turns down. So Hugo is asking if we can say support resistance lines are more like a zone and not a line. The thing is that they're kind of a both, because in that area that you say should be resistance, the price might meet resistance several times. So it might, for example, drop at the close of the candle, and then it will go up again to the wick of the candle. And as you can see here, you can actually see it here. So the first touch was just the candle wick, so you could have traded that, and then the second touch it actually went above and dropped down, and then the third one it closed at it. So when it's doing that, it creates an area. Right? So it creates an area, but it also shows you where resistance is getting stronger. So now that this time it closed here, you would know the third time would have been a good place to put at the so it makes it more precise. So as more history that you get, the more precise it will become. So important that you look back at the history, and you will pinpoint exactly where to enter the trade. So the next one, now I got a question about the expiry time, but before I answer that, we have to look at the entries. So let's take a look at, usually when I'm about to enter a trade, I go back to the 1 minute chart, because it's easier to see if price is touching my line or not. So let me show you a line. On the daily charts. Let me copy it from the other chart, and I will show you. And show you an entry. Okay, so remember, you look at as many time frames as possible. So you would not just look at the daily, you would also go down, and the further down you go in the time frames, the easier it gets to find out the exact position for entering the trade. So instead of just an area, it becomes more a line, a price. So let's take a look at a trade here, for example. Let's put a line there. Let's try to find it. Let's go back and try to find it. Because the way I trade, I've been doing short expiries. And doing short expiries, the technique here differs from doing longer expiries. If you want to do hourly, I lost the chart. If you want to do hourly, it's much different from doing 10-minute or 15-minute expiries, because of the entry. Because when you're doing short expiries, you can't wait for the candles, in my opinion, and this is how I have been trading successfully for some time now. And I think that if you wait for the candle to close, the retracements can actually cost you the trade, because sometimes you might win with 2, 3, 4 pips, and you don't want to be entering the trade. For example, if it's a put option, you don't want to be entering when a 5-minute candle with 4 pips has already closed, because in 10 minutes from that candle, the price might try to round it up, make a peak on the 1-minute chart, and you end up losing because you didn't enter at the top. So if you practice your lines, try to make them as precise as possible. You will enter at the peak for a put and at the bottom peak, at the bottom low for a call option. And this is how it works. I'm trying to find a good entry to show you. So the first thing you want to do when you're waiting for the trade, right, is to draw your line. And you know from this video and previous videos how to draw a line. You go to higher time frames, start, you find an area, and then you go to lower time frames, try to adjust your line until you get the most perfect line possible based on candles and volatile candles and history. See where it dropped big and how many touches you had before, so how strong that line was. And once you get your line set up, you know where price is heading. So if the major price is in a downtrend, and you just drew a resistance line and price is going up, so you know it's going to make a lower high, right? It's going to retrace up, and you see the oscillator below. You see that it's getting overbought on the 15 minutes, maybe 30 minutes, and hourly as well, and maybe even sometimes daily and 4-hour time frame. That's better, even better. Not always, you're not always going to get all of them overbought or oversold. In this case, we're talking about a put, so we see that prices are getting overbought on several time frames. I get a question about expiry again. We'll get to that. And so what you're doing first, the first step is to wait. So now once you have drawn your line, all you can do is to wait, right? You have to wait for the price to come up, touch your line, and confirm with the stochastic that it is overbought. In this example, we're talking about a put option, so it's gonna have to be overbought, at least on 3 time frames. It differs from time to time. Sometimes price is really trending down, maybe you can get it even though if it's just overbought on 2 time frames, or like the 5 minute and 15 minute, but I would prefer at least 3 higher time frames. So in this case, you see how price was trending up and the line was already set up. This line, I've had this line on my other charts. I've had it since last year. I've already told you about it on the other previous videos. So then you would go to the lower time frames, because once your line is set up, you can go to the lower time frames because it's easier to see when price is coming up. So all you do is to go to higher time frames and look for a stochastic, check your line, and then you go back to the lower time frames and you wait for your price to come and touch the line. So let's see if we find it on the 1 minute chart. Alright, here it is. So in my case, I would have waited for the price for this candle. This candle here. This is where I would have entered the trade. Already on this candle. It's about 1.5 pips away from the line. As you can see, the next candle did touch. And but it's okay, 1 pip, it's okay. So I would have entered for about 10 minutes already here. As you can see, it did go down all the way, and it tried to turn back up before the full hour. It failed, but sometimes this turn up here further below, this sometimes happens further close to that line that you want to take the trade on. So that's why I don't want to do a longer expiry for my trades. I enter at the highest peak for the put, and after 10-15 minutes, that's it. I want to be out of the trade because I don't know what's going to happen afterwards. So this way, entering at the best possible point, 10 minutes, 15 minutes expiry works. There is more to it about the time, because you have to consider the candles, the times. For example, if you pay attention to the clock, it's 15 minutes to full hour. Usually around full hour, price goes in the opposite direction of your trade. This is something I've noticed a lot with, especially with Euro USD. I don't know about the other assets, but I've noticed this with Euro USD. You can go back, look at your charts, and you will see lots of areas where this has happened. Here again, you see clock is after 2, price went down, and you can find many areas. Let's see if we find more. It's not always how it works. Half hours, that's true for half hours as well. Look here, we have the 10:30 candle, and then price went up. So this is something that happens, and you have to take that into consideration when you pick expiries, because the candle that is going to close is the 30-minute candle here, or the 15-minute candle that's gonna turn back up. And yeah, you can check that out. It's important to take note of that as well, the timing, the time pattern with Euro USD. So another question, is it good to be overbought, oversold on all the charts? But if not everywhere, is it better to be oversold, at least at lower time frames? No, the higher time frames, well, the first one is true. You want your stochastic to be overbought at so many positions as possible, because then more sellers are gonna enter. Sorry. or oversold for that matter if we are waiting to take a call. But if it's not, if price is trending very well, let's take a look at the 15 minute. Here, for example, price is really trending, trying to get up. So in this case, for example, here, maybe the hourly here was already overbought, but or halfway oversold, sorry, and the 15 minute is oversold, but the trend is heavily going up, and you have the EMA support, so you could have entered. So there are many factors that weigh in when you enter, but you have to take all of those together into consideration. So not just is it overbought or oversold, that's just one of the things that are there, but I want at least 3 time frames to be in agreement. And once you get better, you will notice how you can bend the rules and how to adapt, but 2 or 3 on the higher time frames. And if you have, for example, a higher time frame, let's say the hourly would be overbought here, and the 5 minute time frame would be oversold here. So now they're not in agreement, right? But I would still not, I wouldn't enter a trade here anyway, so it doesn't matter. Yes, exactly. Sometimes you get your price, for example, you want to take a put option and you have overbought positions on 1 minute, 5 minute, 15 minute, maybe even the 30 minute time frame, but not on the hourly, because what you have to look for is that where is price going? Is it going to become oversold or overbought or not? Where is price going? That's the most important question. And in which direction are you going, with the trend or against the trend? So if you take those things into consideration, it becomes easier to understand. Hope that answers the question. You need some practice for this, but look at those things that I said about the timing and how to draw lines and how to anticipate your next trade. If you understand those things, it becomes easier. For example, today, if you look at my other chart here. Any questions, by the way? If you have any questions, you can shoot. There are no strict rules in a way that I can say you only have to do this. It depends on all the confirmations that you do, and again, if you look back at the other videos, there are lots of things that you have to consider, like you have to consider your lines, the major trend, your EMA, your stochastic, your candles, the volatility, the timing. So it's not just one thing. You're not going to get the perfect trade just because something is overbought. Sometimes price just neglects those indicators, just continues up regardless of whether it's overbought or not. So the important thing is, do you have the best entries? Do you have the best lines? Is it with the trend or against the trend? No, I don't use alarms. I tried those once. It gave me a headache. I removed all the alerts, and I don't like it. I don't want to be stressed into it. I want my trading to be something calm, and I want to enjoy, and I want to focus on the reading the charts, not being told by some alerts or indicators what to do. I want to be in charge of my own trading. So I know it's good to have them sometimes, because sometimes I've been up late waiting for a trade. I know price is going there, but I don't know when it's gonna happen. And I remember once I set the alarm on my, actually I didn't set an alarm, but it was my inner clock, my biological clock woke me up 10 minutes before the trade. I jumped on the computer, opened it up, MetaTrader, and price was just a few pips before my before touching the resistance lines, so I got into that trade when it touched it, and you know, just inner biological clock. What I'm waiting for today is probably this EMA 200. Milos is talking about the 30-minute charts and 8. I don't know about that. What I'm waiting for again is the price retracing back up here, but I don't think it's gonna do it. Looks like it's already overbought, as you can see in the stochastic. Even the 30-minute time frame is overbought. So and I don't like the volatility either. If you look at the 5-minute, you see how price is jumping up and down here near the lines. I think I'm done for today, and it's already 1800 here. Banks are closed, and you see volatility is getting slower and slower, so I wouldn't trade. So any more questions? I don't get caught so much in the name. I get a question about the Fibonacci levels. Let's bring the Fibonacci. It's basically what it does is the same thing as you do manually. You draw lines. You draw lines basically based on the highs and lows. If you're talking about those Fibonacci, the 68s and 32s or whatever, I don't use those things. I don't even believe in those things. Some people do, some people use them. I don't care about those. The other one, this is the Fiboggan weekly. It draws lines basically based on the weekly highs and lows. Now that's something I can use, so I like that, and it's been working out. So you know what they say, if it ain't broken, don't try fixing it. So that works for me. But the Fibo levels, I know, I think you're talking about, we have some articles about it on binaryoptions.suck.com. If you search Fibonacci retracements, for example, the 61.8%, the 50%, the 38.2%. Now those things are drawn on the charts, as you can see on the other chart, the 38%. I don't get caught up on those things. I just care about the lines. Are they good? And I double check them with my own analyzers, just as I did on this chart. I draw my own lines as well and try to compare. So I'm showing a clean chart here now for you guys to understand. Don't get too much caught up on the Fibo levels, but what they say, what might be something about it that's true, is that the Fibo PIV, the 50% level, if price is above the 50%, basically they say it's an uptrend. If it's below, you want to rather take puts, and that's something that could be true, and but you still have to do your own analysis. As I said, if you're getting higher lows, if the overall trend is in an uptrend, and maybe it's making it like here, you see on the chart, it's making a lower high, but it's below the 50%. Still, if you would have taken put options here, you would have lost. Look how big bullish candles jumped up here. So you can't get too much focused on those numbers. Be focused on the lines. Those are more important because it shows what traders are doing in the market. So any other questions? So we covered the volatility, resistance, support, resistance lines one more times. And please, if you haven't watched the earlier videos, you should watch them, because I carefully, in more detail, I explained the support resistance lines and trends and more. Yes, I'm trying to trade with the trend, but the whole trend thing is kind of difficult to explain. For example, if you would look here and tell me what is the trend, well, as you can see, it's been a mix, and I have taken puts on these tops here, and even though price, if you would draw a line from here to here, let me wait for you to see if you can see it as well on the chart. Yeah, you can see the line that I drew. So if you would just, yes, so if you would just look at this area, this is the 4-hour time frame, by the way, you will see that, hey, price is going up. And you would say, I don't want to take a put option there, but I would do it, because I would say, well, price, if you draw the line from here to here instead, you would see that, hey, price is still in a major downtrend. And look at this new line. So if you would draw it like this, but if you would go to a higher time frame, that would be more clear. You would see that, hey, these tops are below the previous tops, they're below the EMAs. So yeah, it's not that different. It's not strange to take a put option here, because the daily charts, the major trend is going down. And you also have to look at volumes. The trend isn't always everything. You have to look at volumes. When you see you have had huge sellers in the market at the same levels all the time, so obviously you want to enter. If other confirmations are true, the trend, the oscillator, the timings, the volatility, the lines, the candles. So I know it's difficult to put everything together, but you should try practicing drawing lines and looking at the trends and volatility of the candles. See, these huge candles, they tell you, these are giveaways about where sellers, or buyers for that matter, are going to enter the market. Now, as far as I've seen on my trading history, I usually do mostly put options, so that's why my examples are about puts rather than calls. And if you look at my other chart, you see all these arrows pointing down rather than up. So and maybe it's because EURUSD has been in a downtrend for a long time now, so it's not strange that I've been doing mostly put options. Okay guys, I hope things are clear, and please do watch and rewatch the previous videos, because there are lots of things that are explained there before that you might not get the epiphany the first time, your aha moment, but if you watch it 2, 3, 4 times, you might see new things that you didn't see before, and it will help you. I know I've been there, done that myself. You watch a video once or twice, and then once you have watched it like 5 times, 6 times, you understand things that you didn't see before, and then suddenly it improves your trading, and it might answer some questions. And thank you for joining. If you don't have any more questions, we will wrap this up for this week. And we'll see you in the Skype group. So if anyone watching us, you're not subscribed, please subscribe, and you will see when the videos are uploaded. You don't need a link from me, because you will see the CommuniTraders when it's live. It's gonna say on your YouTube that we are live, or you will see when the new videos have been added, because sometimes I'm gonna do offline videos as well. Sometimes I do offline videos explaining then uploading it. If you're subscribed, you will see that a video has been uploaded, and you can check it out without needing any links or anything from me. Yes, Nim, I have actually written an article about trends, and I call it the inceptions of trends. You will find it on Binary Options That Suck. You should actually read it. It's about analyzing the daily charts, I think it was, and I wrote about this inception thing with the trends, and I think that article will help you understand a bit more. So remember, we have lots of articles at binaryoptions.com, binaryoptionsthatsuck.com, and thanks for watching. Don't forget to subscribe and add us on Skype, CommuniTraders-Live. Okay guys, see you later.